Something that stands out in today's day of trade is IndusInd Bank being heavily under pressure. And we have Harsh joining us. Harsh, what went wrong in the company's numbers this quarter?
Pretty much everything, Mika and Alex. What really didn't go wrong, and let me come to that very frankly, because deposit growth was strong in comparison to some of the other private sector players like Kotak, like an Axis. Deposit growth was stronger, and that's probably the only thing that actually went right for it this quarter. But let's first talk about asset quality. Microfinance portfolio seeing a lot of stress. You're also seeing stress in personal loans. You're seeing stress in the credit card portfolio, and therefore the stress quite wide based and wasn't like a single sector, but a bulk of 33 to almost 50% of the credit costs were contributed by these three, and that's a large quantum. And credit costs coming at 1.5%, that was of course at the higher end, but on top of it, a 525 crore contingency buffer built in by IndusInd. It's not giving any confidence to investors at the moment. 18,000 crore worth of market cap wiped out. So that was one. Second is with regard to margins. Your margins have come off because loan growth has come off in those high yielding segments. So loan growth lower, margins therefore lower, and all of that taking a knock on ROAs, 1% versus the 1.6, 1.7 that IndusInd has guided for and has been clocking. Clearly, the impact on the stock likely justified to a certain extent, but analysts on the street have a 51% upside on this. Wow. So keep your eye out on that, because the buy ratings haven't gone off in a substantial fashion.
Let me clarify, 51% upside from the current market price?
Yes, from the current market price, Alex.
Wow, okay. Okay, so, but then let's in fact find out whether our experts today also agree with that upside potential, or whether they are, like a lot of other investors in IndusInd Bank, heading for the exits. Ashish Maheshwari, director at Arihant Capital Market, is joining in, and we've got also Brijesh Singh, who's senior technical analyst at Opulent Investment. Thank you so much to the both of you for taking the time. Ashish, some of the points that were mentioned by Harsh, among them, of course, the asset quality worries and the increase in provisions to the extent of 73%. Is that something that is a big negative for you? And would you say that if you hold IndusInd Bank, you should exit like so many people are doing today? And would you hazard, or would you say that it's an opportunity to buy, as some people are suggesting?
No, I think we should not follow what various reports are suggesting to buy this stock as such. And again, IndusInd Bank is sufferer of just Me Too kind of thing, where what ICICI and Axis are doing, so you are also trying to do similar activities and try to lend very aggressively at a lower rate. So now you are seeing the results, that NPAs have really gone up. Their profitability is down by almost 40% quarter over quarter. And there's no respite also. So it's not necessarily the next quarter they are going to show a lot of improvement in working from this particular quarter. And this is the reason we are witnessing from 1,690 rupees. Now stock is at 50 rupees low today. And another thing is, like, if we see even the shareholding pattern in last 1 year, FIs have reduced their holding in this bank from 42 to 34% now. So there's continuous liquidation happening in IndusInd Bank stock also. And this MFI portfolio, credit card, or personal loan, etc., they are really going to be pain in the neck in the coming quarter also. So I'm not buyer at this price. Maybe I like to sell this stock on rally.